Hello and welcome. Today we are going to be doing our favorite thing, which is analyzing more real estate deals. So this is actually part of a video series on how you can get started investing in real estate using FHA loans, okay? So if you're a first-time home buyer, there's a whole video series. You could go and check out the playlist here. You can go back, see some real estate terminology, and you could hear my story on how my wife and I, we actually delayed our wedding in order to use, a little bit less than $10,000 in order to get started in investing into real estate, into a cash flowing property where we lived rent free and we had extra cash flow every single month. And I want to teach you exactly how to do it. If you're a seasoned investor or if you're a syndicator, you can still watch these videos and just get an analysis, and maybe you could invest some of these properties. But again, we have a whole other video series for more seasoned investors. We use a little bit different platform ourselves, but I wanted to give back the knowledge to the people so they can be empowered in order to do these deals. So who am I? Let me introduce myself if you don't know me already. My name is Maxim Cruz. I'm actually a commercial real estate broker as well as an investor. I love real estate, okay? I love the power of investing. I love everything that has to do with finances, everything that has to do with business, and just also self-improvement and improving yourself. So just as a disclaimer, okay, because I am a licensed real estate broker, okay, this is not investment advice. I don't know what your financial situation is, so I suggest you go and meet with a certified financial planner or an attorney or whoever is going to give you financial advice. This is for information purposes only, okay? So let's go ahead and get started. I actually have two special things going on in this video. So the first thing is, again, this is for a good friend of mine, Mr. Denzel Rodriguez, the finance geek. If you're a Kingdom citizen, welcome back. We are going to be looking into how to increase your cash flow so you can use a velocity banking and pay off your debt sooner. If you have no idea what I'm talking about, there'll be a link below, or go and look up the finance geek Denzel Rodriguez on YouTube, where you could find more videos regarding velocity banking and how that can help you pay off your debt, including real estate and any other sort of debt you have. So special thanks to Denzel. We are going to continue analyzing property in the Pompano Beach area. So today, what are we looking at today? Make sure you stay till the end. I actually have one more special gift for you at the end, and I'll show you exactly where to get it, okay? So today we are analyzing 1471 Southwest First Terrace in Pompano Beach, Florida. MLS number just like last time, F10207731. It was listed back on December 19, 2019 for $415,000. There are 3 units total in this building, and the description goes like this: amazing find, 3 units in the heart of Pompano Beach, turnkey operation, roof is around 4 to 5 years old. All units have central AC, hurricane shutter, separate water meters, washer dryer hookups. Rents are currently below market, and he goes to disclose some of the information there. Earn income right away with little or no work. Purpose, call for details, blah, blah, blah. Okay, and then here, just like I said last time, there's usually a description. One of the units that you see right here is actually a 2-bedroom, 1-bathroom, rented out for $1,200 per month. Then the other 2 units are both 1-bedroom, 1-bathroom, rented out for $950. Okay, and then just like last time, it's actually the same real estate broker, and I've pretty surprised with how detailed he does this stuff. But I am going to give you some cautions on what to look out for, because again, some of the information that's on here, I would say you would have to add a little bit more on there, and you'll see exactly what I mean, in order to really make this kind of your own thing, okay? So let's get right into it. So right from the property description, again, one of the units is 1,200 the other one is $950, and the other one is $950. So the first thing that we do, again, don't focus on this because the green is actually the offer, and I'm going to use these tabs for a couple of other things. And if you all haven't watched my previous video, I didn't talk about cash on cash returns, so this is going to be a special series on that one. So just like last time, we're looking at 3 scenarios. One is going to be a pure cash investment. So if you were to buy this property for $415,000, what would it look like, right? The second one is going to be leveraged investment. So the leveraged investment is with conventional financing, putting 20% down. And then the last one is the owner-occupied FHA loan using 3.5% down payment, okay? So let's go side by side and look at exactly how the numbers work out. So the income on a cash investment, when we take the $3,100, multiply it by 12, we have an income of $37,200. Both of the cash and the leveraged investment, that number is the same. Now remember, under an FHA loan, you are required to move into one of the units because this is going to be your primary residence as you are the home buyer. So in order to do that, what I did was I kept, okay, this $1,200 unit is exactly the same. The 1 bedroom for $950 is the same, and this one for the 1 bedroom, you're actually going to move into this one, so you're no longer going to see this income. The other thing that changed here, let me see if I have it. Okay. The other thing that I felt was these units are actually below market value. Okay. And in his disclosure here, he does this little rental analysis where he shows the 2 bedrooms in the area. You know, the median price range are roughly $1,387. For a 1 bedroom, it's roughly $1,088. So I said, okay, for the 2 bedroom, I definitely agree that $1,200 is a little bit low. So let's look at it with $1,250. So that's where the income that we have is $26,400 under the owner occupied. Next, we go ahead and get the numbers, the expenses, okay? So under this dash line, these are some of the expenses that you should consider. Obviously, you have property taxes. That's going to be the same no matter how you buy the property. You're also going to have insurance. Now, in some scenarios, the owner-occupied are going to get a little bit better rate. Here, he disclosed that the existing owner is actually paying $3,000, so I kept that number the same. But actually, for the owner-occupied, this number might be just slightly lower. Okay. In the property description, he did say that the water and sewer were separate. In that scenario, you can bill the actual water charges to the tenant, but you as the landlord are actually responsible to pay the water and sewer to the city. So nevertheless, depending on, I don't know how the rental contracts are at the moment, if they include it or not, I just estimated, let's say $200 every quarter, every 3 months, which ends up being $800 for the year. So that's actually an expense that he did not have in his calculation that I added. The other expense is landscaping. So again, in the owner-occupied unit, hey, I'm assuming you're you're gonna have to do some work for the unit. You're not up to that investment level just yet, but again, you have your investment hat on, which is why you're watching these videos, so congratulations on that. And the last number I added in there was actually repairs for $600, which is roughly $50 a month. It might be a little bit more, might be a little bit less, but again, it varies. So I actually have a gift for you. As you see right here, I actually have this printed out on a nice little spreadsheet, and I've created this spreadsheet specifically in Google Documents, okay? So in Google Documents, you can actually go and download it, use it right in Google Docs. You can export it to Excel. You can play around with these numbers. And what's cool about it is actually I have an existing tab, so you can plug in all the numbers that you're getting from your local real estate broker or that you're analyzing deals on your own. And then there's a second tab, which is called the offer tab, which is some of these numbers that I'm gonna look into here. So then you can kind of compare to see what makes sense. So the way that you get it is there's going to be actually a link in the description of this video. You could just go, you don't have to enter an email address or whatever, and you could use that. Again, this is for information purposes only. You have to know what you're doing. This is not investment advice. So please, please, if you're going to use this sheet, make sure that you either reach out to me. I'm actually going to do a follow-up video explaining how to use that, explaining some of the formulas, explaining what's in there, but you can go ahead and get it and use it for your own purposes. Next, we have the expenses. So again, in the cash investment and the leveraged investment, that number is $10,272. Because you're saving the landscaping number here, it's a little bit less, $9,432 as an owner occupied. Again, in the cash investment here, the financing number is 0. A leveraged investment, I have the numbers right here. And what's cool about actually this sheet right here, you can actually enter what the purchase price is, and it will calculate the down payment of 3.5%, which in this case is $14,525. And also there's another box for conventional financing. In this case, at the price of $415,000, it's an $83,000 down payment. So based on that, on the leveraged interest, it's $1,585 a month for principal and interest. So that number turns out to be $19,020.23. Okay. On the owner occupied, remember you have your PMI, which is your private mortgage insurance. In this case, because it is a 3-unit, I factored in 1%. So once you factor in that number, your principal and interest is $2,245.66. And that includes your PMI as well. I apologize. So for the 12 months, it's $26,947.90. Okay. Then we calculate NOI. Again, if you haven't watched my terminology video, go and check that out. NOI stands for net operating income. Pretty much it's the difference between your income and your expenses, okay? In the cash investment, the NOI is $26,928, okay? In the leveraged investment, obviously because we're paying off this mortgage, it's a little bit lower. It's $7,907.77. In an owner occupied, it's negative, right? So you have a net operating income is actually negative, which means your expenses are higher than the total income that you're getting for the property. So pretty much your financing plus these expenses is roughly $35,000. You have $26,400 in income, which means out of pocket as an owner occupied on an annual basis, it's $9,979.90. Now hold on, I do have a special thing here that I'm going to analyze the price, but just right now, the way that this property looks, on a monthly basis as an owner occupied of this property, you're actually paying $831.66 out of pocket. Now, I know that in this area, an average 1-bedroom is very close to $1,000 a month. So in this scenario, you're actually saving $169 or $168 and change per month. And again, if you know about velocity banking, that's actually cash flow that you're generating, if you were doing that. Plus, there's other incentives here that I'm not looking into it. All right. So now, what I love about real estate is that everything is always negotiable. Okay. And that is key here. Again, here in South Florida, we live in a very, very distinct place where I've seen some properties sell for even $100,000, even $200,000 less on some of the bigger deals because properties aren't priced correctly. Sometimes they're not market value. Sometimes the seller just wants to, sell them and go retire to, Portugal or Spain or whatever. So depending on the scenario, you just never know where things work. So just like last time, what we actually did, and again, on the spreadsheet here that I'm going to give you that you can use on the offers tab, the only thing when you go in there, the only thing that you really need to look and start changing is your list price, which we call here the offer price. So in this scenario, I said, okay, let's look at it at $375. Now on unit 1, I say, okay, right now I know it's below market. A 2-1 is roughly in the 1400, 1450 range, but because we look at it conservatively, we're saying, okay, it's got to be 1325. On the 1 bedroom, it's about 1050. I know it's about 1100 in that area, but it's about 1050 is the market rent. So again, now let's look at each one of the scenarios using the price point of $375,000, which is $40,000 less than the asking price, okay? In a pure cash investment, okay? And I'm gonna get to talk about cash on cash here in a little bit, so make sure you stay tuned in here. Actually, let's go ahead and jump into here because I skipped right over this part, so I apologize for missing it, but we're gonna go ahead and cover it now. All right, cap rate. Remember, the cap rate is just a short term for capitalization rate, okay? What is capitalization rate? It's your NOI, your net operating income, divided by your purchase price or the price of the asset, okay? So the cap rate in this scenario is 6.49%. In the market that we're in right now, 6.49% for a multifamily property is actually fairly average. Here in South Florida, we're seeing more and more cap rates right about the 5.5%. I know the Houston market is very hot. It's like in the 7%. So depending where you're in, there's somewhat of a, not a standard, but a market cap rate, which is kind of an average for what's going on in the area. So this is pretty much average for what's there. Now remember, in this scenario, it's priced at the $415,000, and it's priced at the market, at the rents that are being collected right now. The realtor here, he actually just estimated that the market rent, I think he went a little bit too high, which is why this property hasn't sold for that price. He's saying that the projected income is $1,400, $1,300, and $1,250, which will put him at a cap rate of 9.28%. And again, anyone that's looking at this, I can probably tell you right now, that's why it hasn't sold at that price, because they're looking, look, there's no way we could rent this $1,200 unit for $1,425. So, the numbers are, a little bit over, a little bit higher. I guess he's very, very not speculative, I guess is the good word, but he's hopeful that it can rent for that amount. But again, I'm a little bit more conservative because I've worked with institutional investors, and they're always going to be conservative in lowering the numbers just to have more safety, less risk, etc. All right, so last time when we looked at this, I actually made a mistake, and I told you that you should be looking this as what you're investing. So I don't know if this is used in other financial terms as far as the stock market. I think it's just called return on investment, but actually in real estate is one of the only areas where you see what's called a cash on cash return. What does that mean? Pretty much what that means is that you put a certain dollar amount of cash in and you got a certain dollar amount of cash back. That return is called a cash on cash return. Again, this isn't investment advice. You can check in with your local certified professional in order to get the information you need. This is just based on the research, and I'm resharing this information. So in this unit where it's leveraged, meaning that you went into a bank, you got financing with 20% down payment, you put in $83,000, and on an annual basis, you got back $7,907.77. So a cash on cash return would be 9.53%. Now looking at the stock market, where on average it's been anywhere between 5 and 7%, I think this number is very, very good. Again, in this scenario, as owner occupied, we're not looking at the cash on cash return because you're actually going cash out of pocket. But again, remember your living expenses, if the market rent is at the $1,050, $1,100 range, you're saving substantial amounts of money here. All right, now let's go into this scenario where we're saying, okay, because we are in the real estate market and because you're working with a licensed real estate professional who knows how to negotiate, and you should always use a realtor for your deals because they are professional negotiators, we're going to go ahead and negotiate this deal down to $375,000. If you're looking to work with a licensed professional, I'd be more than happy to refer you one in your local area. We have actually a referral database all across the United States. And again, I like to always connect with real estate professionals that can serve you in this scenario, that are well seasoned, that know how to talk this language, that understand, financing and utilizing and, growing real estate and all of that good stuff. So on this offer, we're going to go ahead and offer for $375,000, and now I'm going to show you why this price makes sense. Also, we are going to increase rents. Again, he disclosed here that on his, let me see here, he is hopeful to get, and of course I'm forgetting the numbers, so here we go. He is hopeful to get $1,400 for this unit. I'm saying $1,325, so I'm still being conservative. Unit 2, it might be a little bit better condition. He's saying $1,300, so I'm still saying it's $1,050. I'm being conservative. And the other 1-bedroom, he's saying is $1,250, so I'm still keeping that $1,050 price. So with all of that, if you were to do a cash investment at $375,000, your net operating income, just by increasing the rents a little bit, jumps from $37,200 up to $41,100. The expenses are staying the same. So with that, actually your cap rate, which is your net operating income divided by the $375,000, is 8.22%. Right now at the $375,000, this deal is looking really good. So again, probably in my estimation, as I watch this property, and again, I'll make an updated video as I keep my eye on this property when it sells, how much it sells for. I wouldn't be surprised if it sold in the $375,000 to the $385,000, $390,000 range, just because the numbers make sense not only to an investor, but also look really, really good to an owner occupied, okay? Leveraged. Now, let's say you go to the bank and you get financing, right? 20% of $375,000 is, let me see here. I have my little cheat sheet. So at $375,000, we are at $75,000 as your down payment, okay? Because you're using leverage. So based on that, your actual expenses for your mortgage on an annual debt service is $17,186. So when we subtract the income, the net operating income of $41,100 minus these expenses minus your debt service, you actually have $13,641.05 left. Now in this scenario, we're not looking at cap rate because we are leveraged. We're actually looking at cash on cash return. So how does that work out? You have your net operating income of $13,641.05. But remember, in this scenario, you invested $75,000. So your cash on cash return is actually 18.19%. And again, this is why people love real estate, because it's very hard to get these numbers in other type of investments. And again, this is for information purposes only. I don't want to lose my real estate license because I'm sharing out all this great content with you, so I have to keep on going out there and giving these disclosures so I don't get in trouble. All right, on the owner occupied, and this is why I flipped out and I got excited last time, because again, at this price point, it just makes sense. Okay, now let's go ahead and do the numbers on the owner occupied. Now here, because on this unit 2, you're not gonna have it rented out. You are renting out $1,325 and $1,050. Your total income is going to be $28,500. Now, because you're using, because you're buying it for $375, your annual debt service. So right here, for example, in this scenario, it was $2,245. At the $375 price, it's actually $1,878.43. So you're saving $400 there. So what does that mean? That means that now your NOI is $3,473.13 negative. So you still have more expenses than income, But look at this number. And again, for you Kingdom citizens that know about this stuff, this is exactly what we're talking about. This is why I love investing, especially with FHA. If you could do it, okay? Monthly out of pocket in this scenario at the 375 price point with these rents just a little bit higher, $289.43. Come on now, where can you get those type of deals? This person, okay, we took them from paying $1,000, maybe $1,100 in rent from somewhere else, and now they are getting into this multifamily investment property. They're getting cash flow. They're getting money from their tenants to help them pay for rent, to help them pay for the mortgage, and their out-of-pocket expenses monthly are $289.43 to live where they live, right? Now, all of a sudden, if they were paying $1,100 in rent, they have an extra cash flow of $811. And if you're utilizing velocity banking, man, you are paying off some serious debt very fast. And, you know, it just becomes an amazing resource for how you can use this number and, again, do it. So this is the power. Now, last time I had a few people reach out to me and say, look, you know, I just don't want to live with neighbors. Remember, this is a sacrifice. It's a short-term sacrifice. It's a year or two sacrifice that you're going to be in this property. The only reason you're using FHA finances is because your down payment is so low. In today's market, right, where if you're buying a single family, even if you're doing FHA and you're putting in the same amount of money, when you look at the monthly cash flow, most of the time it's actually going to be more expensive because you're going to have these maintenance expenses and other expenses that maybe you're not factoring in there, and you don't have additional income that's helping you pay that mortgage, right? So again, this is why I love investing in multifamily real estate, and you could do it with 2 to 3 to up to 4 units. Remember, you can invest using FHA loans up to a 4-unit property. Give me 1 second. I'm going to grab this piece of paper right here that I wanted to disclose. So actually in where can you find more information on what's the mortgage limits? Remember, the FHA is part of the First Time Homebuyer Association by HUD, which is the Housing and Urban Development Department of the United States. So when you go there to HUD.gov, you can find out what's called the FHA mortgage limits. So you can look it up by your zip code, and you could also look it up by your state. It gives you what's called an MSA, Municipal Statistical Area. So pretty much what that means, in the Fort Lauderdale, Pompano Beach area, you could buy a one-family. The high limit is $373,000 for FHA loan. 2-family is $478,450. 3-family is $578,350, and a 4-family is actually $718,750 are the maximum numbers that you can use for an FHA loan. So with that being said, can you buy this property with 3.5% down? Of course you can. Those are the numbers. Again, it's this number right here that I love to focus on. You know, you're taking an individual that is paying $1,100 in rent, and you're buying an asset where you're only paying $289.43 in rent. And this is why I disagree with Grant Cardone that in this scenario, this works. I think it's better to buy your property where you live, especially if you're buying a multifamily with a low down payment and doing all that stuff. Some people criticize PMI, which is your principal mortgage insurance. Look, 2, 5, 7 years down the road, you could refinance, get rid of that PMI. You don't have to cash out necessarily. Again, if you're using velocity banking, and if you don't know what velocity banking is, I encourage you to look up Denzel's channel and get more information about it. With velocity banking, depending on your income, you could probably pay off this property in 7 to 11 years, depending on how aggressive you are. And again, I don't know what your other finances are looking like. So again, there are plenty of opportunities to do it here. As we looked at here at the listed $415,000 price, it might not make a lot of sense, but at the 375 price, you know, just $40,000 less, it starts to make a whole lot of sense. So that is the power of real estate investing. So don't be afraid to put offers. Continue watching these videos, download the forms that you could use the Excel spreadsheet and the Google Sheets in order to analyze your own property and start to get acquainted and how to make these offers and what numbers are gonna work and make sense for you. So with all that, have an awesome day, and I'll see you on the next video.